Welcome to today's video, where we embark on a journey to uncover the keys to wealth and financial prosperity. In this exciting exploration, we'll be delving into the world of assets, those invaluable tools that have the potential to transform your financial landscape. Join us as we unveil the secrets behind the 10 assets that could pave your path to riches. So, grab a seat and a notepad, and let's set forth on this enlightening quest together. Before proceeding to the video detail, make sure you have subscribed to my channel. More finance-related videos like this will be coming soon here. 1. Stocks, research and analysis. Successful stock investing also requires diligent research and analysis. Before investing in a company's stock, it's essential to assess its financial health, growth potential, competitive position, and the competence of its management team. This information helps you make informed decisions and select stocks that align with your investment goals. Long-term perspective. Timing the market can be challenging, and short-term fluctuations are common. Therefore, adopting a long-term investment horizon often proves to be more effective. Historically, the stock market has shown a tendency to rise over extended periods. Investing with a long-term perspective allows you to weather market volatility and potentially benefit from compounding returns. 2. Real estate. Commercial real estate. Commercial real estate, including office buildings, shopping centers, and industrial properties, offers the potential for higher returns. Commercial leases often yield higher rental income than residential properties. However, these investments typically require substantial capital upfront and a longer investment horizon. Tax benefits. Real estate investments come with various tax advantages. These can include deductions for mortgage interest, property taxes, and even depreciation. Tax benefits can reduce your overall tax liability and increase your net income from real estate investments. 3. Entrepreneurship, market research. Successful entrepreneurship begins with thorough market research. Identifying market opportunities and understanding customer needs and preferences are essential. Market research helps you refine your business idea and create products or services that address real demand. Risk management. Entrepreneurship inherently involves risk. Effective risk management involves identifying potential challenges and developing contingency plans. The ability to adapt to changing market conditions, customer feedback, and competition is vital to navigating the uncertainties of business ownership. 4. Bonds. Portfolio. Stability. Bonds play a crucial role in stabilizing an investment portfolio. During market downturns, bonds often act as a counterbalance to the volatility of stocks. This can help preserve capital and reduce overall portfolio risk. Credit considerations. When investing in bonds, it's essential to assess the creditworthiness of the issuer. Credit rating agencies assign ratings to bonds based on the issuer's ability to meet its debt obligations. Higher-rated bonds are generally less risky, but may offer lower yields. 5. Precious metals. Hedging against uncertainty. Precious metals like gold and silver are often sought after as safe haven assets during times of economic uncertainty. When traditional currencies and financial markets become volatile, precious metals tend to retain their value or even appreciate. Storage and security. Holding physical precious metals requires careful consideration of storage and security. Many investors choose to store their metals in secure facilities or bank vaults. Alternatively, you can invest in precious metal ETFs, which provide exposure to metals without the need for physical storage. Diversification strategy. Precious metals can serve as an essential diversification strategy within an investment portfolio. They tend to have low correlations with traditional assets like stocks and bonds, which means they can help reduce overall portfolio risk. 6. Peer-to-peer lending. Credit evaluation. Peer-to-peer lending platforms connect investors with borrowers seeking personal loans or small business financing. Successful P2P lending involves assessing the creditworthiness of borrowers. Platforms often provide credit scores and historical repayment data to assist in decision-making. Diversification of loans. Diversifying your loans across multiple borrowers with different risk profiles is a prudent approach. This reduces the impact of potential defaults and ensures that your P2P lending portfolio remains stable. Platform evaluation. Before investing in P2P lending, it's crucial to understand the fees and terms of the lending platform you choose. Different platforms have varying risk levels and loan structures, so choose one that aligns with your risk tolerance and investment goals. 7. Collectibles and art, subjectivity of value. Collectibles and art investments often come with a degree of subjectivity in determining their value. Market trends and sentiment can influence the perceived worth of these assets. Expertise or consulting specialists in the field can be essential when making investment decisions. Authenticity and provenance. Ensuring the authenticity and provenance of collectibles and art pieces is critical. Before making a purchase, conduct thorough research, obtain certificates of authenticity, and seek professional appraisals to verify the value and legitimacy of the item. Enjoyment and diversification. Investments in collectibles and art can offer both financial and aesthetic enjoyment. They serve as a unique form of diversification within an investment portfolio and can provide diversification benefits. 8. Cryptocurrencies. Digital assets, volatility, and speculation. Cryptocurrencies like Bitcoin and Ethereum are known for their high volatility and speculative nature. Prices can experience significant fluctuations over short periods. Therefore, only allocate a portion of your portfolio to cryptocurrencies if you have a higher risk tolerance. Regulatory considerations. The regulatory landscape for cryptocurrencies continues to evolve. Stay informed about changes in regulations and compliance requirements in your jurisdiction. Regulatory developments can impact the legality and taxation of cryptocurrency transactions. 9. Retirement accounts. Long-term savings diversification. Within accounts, diversify your investments within retirement accounts to align with your retirement goals and risk tolerance. Consider a mix of stocks, bonds, and other assets to achieve a balanced and well-rounded portfolio. Tax-efficient withdrawals. When you reach retirement age, develop a tax-efficient withdrawal strategy for your retirement accounts. Different account types, such as traditional IRAs and Roth IRAs, have distinct tax implications for withdrawals. Planning strategically can help minimize your tax burden in retirement. 10. Education and skills, adaptability in the workforce. Lifelong learning is essential in today's rapidly evolving job market. Acquiring new skills and knowledge enables you to stay competitive and adaptable in your career. Explore opportunities for continuous improvement, such as workshops, courses, or certifications. Thank you for watching my video. If you enjoyed it, please make sure to subscribe to my channel. That way, you'll be the first to know when I post new videos. Thanks again for your support.